In the 17th century, the Dutch Republic ruled an empire that spanned the globe. Its ships were in every ocean. Its merchants were in every port. Its currency, the guilder, was the backbone of international trade. Amsterdam was the financial capital of the world. The Dutch East India Company, the VC, was more powerful than many modern states. It was the first multinational corporation in history. Here's what most history books don't mention. The Dutch Empire didn't fall because it was weak. It fell because it ran out of money. Plain and simple. Over the next 12 minutes, I'm going to show you exactly how the Dutch Empire bankrupted itself, how Britain and France replaced it, and why this story matters for understanding how global powers rise and fall. After gaining independence from Spain in 1648, the Dutch Republic entered its golden age. For a tiny country of just over 1 million people, its economic output was staggering. Dutch ships carried half of all European trade. The VOC controlled spice trade routes in Asia. Colonies in Indonesia, Suriname, the Caribbean, and Africa were all Dutch. But it wasn't just colonies or ships that made the Dutch powerful. It was money. The guilder was the first truly global currency. Amsterdam had the first stock exchange. Shares in the VC and other ventures were traded like modern stocks. Dutch bankers financed global trade, loans to other nations, even the armies of Europe. The Dutch Republic was, in many ways, the Wall Street of the 17th century. The problem was sustainability. The Dutch were not a military superpower. They relied on mercenaries, fortifications, and their fleet. And war was constant. From the mid-1600s, the Dutch fought England and France, the Anglo-Dutch Wars, the War of Spanish Succession, and later Napoleonic conflicts. War was expensive. Maintaining a global fleet, funding colonies, paying mercenaries, it drained the treasury. Unlike Britain centuries later, the Dutch didn't have a large population to tax heavily. They had to borrow. By the early 18th century, the Dutch government and companies were deeply in debt. Amsterdam bankers lent enormous sums. European financiers lent even more. Yet at its peak, the Dutch economy was extraordinary. Shipping, banking, trade, it made the country rich beyond imagination. Amsterdam's canals were lined with warehouses filled with spices, sugar, textiles. Dutch merchants controlled trade in Indonesia, Ceylon, Malabar, the Cape Colony. The VC alone employed over 50,000 people. Its revenues rivaled modern corporations. But most of this wealth was tied up in risky ventures. Ships sank at sea. Market prices for spices and sugar swung wildly. Colonies were expensive to run. Profits were enormous, but losses could be devastating. By the 18th century, cracks appeared. The VC was overextended. Debt was mounting. Profits were declining. Corruption and mismanagement weakened the system. Competition from Britain and France chipped away at Dutch trade dominance. The government tried to raise loans and taxes, but the population was too small. Tax revenues were limited. Amsterdam's financial system, once the envy of Europe, was fragile. Large shareholders demanded returns, forcing the VC to sell assets and cut corners. Long-term power was eroding. Then came the Fourth Anglo-Dutch War, 1780 to 1784. This was the empire-breaking conflict. Britain, already a rising global power, wanted to dominate trade routes and weaken its Dutch rival. The war started badly for the Dutch. Their navy was smaller, less prepared, and spread too thin across the globe. British ships captured colonies in the Caribbean, Suriname was threatened, Curaçao was blockaded. In Asia, the British took control of key ports in the East Indies. Dutch ships, loaded with spices and precious cargo, were captured or sunk. The financial impact was devastating. Trade stopped. The VC, already struggling with debt and corruption, was forced to pay for warships it could barely maintain. Amsterdam bankers, who had financed the empire for over a century, began to panic. Investors demanded repayments. Profits dried up. Domestically, the war caused political unrest. Taxes rose to fund the fleet. Cities protested. Mercenaries were hard to recruit. By 1783, the Dutch Republic was effectively bankrupt. The war exposed the fragility of an empire that looked invincible from the outside. Britain, meanwhile, walked away stronger, gaining control of trade routes the Dutch had relied on for decades. By the late 18th century, the Dutch Republic had lost much of its overseas power. The French Revolutionary Wars and Napoleonic Wars further destabilized the economy. Amsterdam's banks survived, but the government was bankrupt. In 1795, France effectively controlled the Netherlands. The VC, once the world's most profitable company, was dissolved in 1799. Colonies remained, but Britain dominated global trade. The guilder was no longer a reserve currency. Amsterdam's financial system, once the engine of global commerce, had been eclipsed by London and Paris. In just 2 centuries, the Dutch Empire went from global dominance to regional power, not because of moral failure, but financial exhaustion. Debt, overreach, and global competition did what wars alone could not. The Fourth Anglo-Dutch War shows how quickly an empire can unravel when finances and military strategy fail. A small nation, rich and powerful, can be toppled by economic mismanagement and global rivals. The Dutch rise was spectacular. Their fall was inevitable once the money ran out. And if we pay attention, history may be quietly whispering the same lessons to modern global powers today.